All right, hey y'all, welcome back. Today we are going to be talking about the big speech Biden just did earlier this week, his State of the Union speech. He's rolling out a bunch of really aggressive proposals, two of them that are totaling up almost $4 trillion in what he's calling a one-time investments in infrastructure and things like that. But to pay for it, he's talking about tax increases and has started finally laying out some of the details of that. Now, this is not a political channel. This is where we talk about budgeting, investing, saving, building that belief that I think has been lost in America, that you can save and invest your way to an abundant life. And while we don't want to get into the politics of it, the fact is that changes to the tax code are going to impact your ability to save, invest, and build for the future. So today we want to talk about those tax changes and kind of some of my thoughts on them. Specifically, one of them, I don't believe it's ever going to happen. But let's start off with this. The first one is that he wants to raise the top marginal tax rate from 37% up to 39.5%. Now, one of the advantages of being a politician who's been literally in Washington for decades is he's very, very shrewd. He's raising it, that 39.5%. That was the tax rate at the last arguably conservative Republican, which was George W. Bush. So he's kind of trying to head off some Republican criticism right there. Now, part of what he said is that anybody making over $400,000 a year is not going to see their taxes increase under his plans. But the tax code right now starts, that top rate, that 37% currently, starts at $523,601 for single individuals and $628,301 for married individuals filing jointly. So I do question whether there's going to be some funny business in there. Maybe they start moving some of the other thresholds around so he can push that top tax rate down a little bit. I don't know that for sure, but I kind of wonder whether that's coming. All right. Number two is he's going to increase the corporate tax rate from 21% to 28%. Now, this is not unexpected. They've been talking about it for a while. Democrats have been mad about lowering the corporate tax rate for a while. And there are people like Jeff Bezos who have come out and said they support that. But here's the problem I have with that. And I want to add in here, part of what he wants to do is take billions. I've read $70 billion for the IRS to staff up to go after people who are trying to actively avoid taxes. My problem is this, is the 28% really hurts the smaller businesses and the mid-sized businesses. And the news loves to talk about companies that avoid taxes entirely, but they tend to be talking about the really big companies. Again, I think I read that something like 55 of the top companies in America don't pay any taxes at all. So changing the tax rate doesn't matter if they're not paying anything. What they need to do is they need to go fix the tax code to close those loopholes. I think this is probably going to pass. I think they've got the votes for it. I don't really like it as a small business owner myself, but I'm much angrier about the fact that they're raising my tax rate, but they're still not going to be collecting more from people who are using the tax code legally for depreciation of assets and things like that to avoid paying taxes at all. Number three is that they want to almost double the capital gains tax from 20% to 39.6%. Now, when I read this the first time, this is a horrible idea. And the general idea here, so you understand, it's this. If you buy a stock and you hold it for less than a year and you sell it and you have an appreciation, then you pay that on your standard income tax, right? It's an income. But if you hold it for longer, the government wants you to invest in the economy, and so they tax you when you do sell it, that capital gains, at a lower percentage than most people's income taxes. So it's taxed at 20%. They want to raise that to 39.6, which is a tiny bit, 0.1% higher than the top income tax rate. I got really angry about this until I read one other little tidbit, which is for people earning more than $1 million a year. So for the majority of us who do not make $1 million a year, if we keep a long-term investment and we sell it for a profit, we will still be paying the 20%. I still don't like it, and this is the one that I think is really, really shrewd, okay? I believe this is going to create, even Democrats have already come out and said this is a bad idea. I think this one's never going to be able to get through. It might be able to get through the House, but I don't think it'll ever have a chance to get through the Senate. So I believe this is a straw man. I really do. I see what he's trying to do. If you're making more than $1 million a year, why shouldn't you be paying basically the same as your top income tax rate for those long-term investments? I see what he's trying to do, but I think this is a straw man that he's set up, built into this so it can be negotiated away and he gets everything else that he's asking for. I don't think this will ever see the light of day. I really believe this is the shrewdest move he's done because it's such an incredible jump. It just seems very obvious to me it's a red herring, but we'll see. But the fourth piece I want to talk about is he is eliminating something which is called the step-up basis. And again, he's putting in excess of $1 million built in here. But what a step-up basis is this. I pulled up this definition for you so you could read it. A step-up basis is a readjustment of the value of an appreciated asset for tax purposes upon inheritance. So what it boils down to is this, is say your mama dies and she leaves you some stocks, right? Now, she bought that stock at $5 and it's currently $10. If she sold it at $10, she has to pay that capital gains increase, the difference between 5 and 10. But when you inherit it, that base value that you start calculating from resets at 10. So if it goes up to $20 and you sell it, you have to pay 10 to 20, that $10 difference in growth, not 20 down to 5 where it was originally purchased. Now, this does allow some massive transfers of wealth between relatively well-to-do people and their children, with avoiding that chunk of taxes, at least as the government would see it. But they are building in a $1 million threshold you've got to cross for this to happen. Again, intending to help those of us who maybe a parent dies or a relative dies and leaves you $10,000, $20,000, $60,000, $100,000, but really trying to get those ones that are getting more than $1 million from investment side. So again, I kind of think that one might be fought out, but I don't know. I think maybe the Democrats have the votes to get that one through. So that's it. For the most part, this thing is very carefully constructed to avoid getting below, say, about a $500,000 to $1 million a year threshold, only taxing those who are up above those levels, really leaving the rest of us, the middle and the upper middle class, not affected at all. I hate it for the perspective that, well, I hate income taxes. I don't think the government should have them. I think that the government is way too big and we need to cut spending and cut everybody's taxes down to about, 5%. And I hate how complicated it all gets. I hate the fact that I have a tax advisor that I pay every single year to prepare my taxes, because if I try to do it, it's all wrong. But I think that how he's done it is very shrewd, a very experienced politician, crafting this in a way that it's going to be palpable. And even Republicans are going to be able to say, well, I didn't vote on tax increases for the middle class. Interestingly, I did read also this week that Republican and Democrat, the basis for the donors and for the support has actually been shifting. The Democrats have far more extreme wealthy people supporting them, whereas the Republicans are going more grassroots, more middle class and lower working classes. Whereas the Republicans are still seen as the party of the wealthy, right, and of big business, and that doesn't really seem to be the case anymore. So it's all a mess, but I think this is carefully constructed. I don't think it'll affect, honestly, about 90 to 93% of us, depending on your income and your investment levels. And again, one of them I think is just going to go away entirely. I think it's truly a straw man, a red herring for the Republicans to go chase. So again, I hope carefully I did not try to get into my politics too much. I know I did there a little bit. But overall, I see this as a plan that's going to move forward. The spending is a whole different issue, and that would be all politics all the time for me. So I'm going to stay out of it. But keep this in mind. If you are older and you do have substantial assets, and you're thinking about transferring it to somebody, recognize this tax code is starting to change for you. It may be time to start talking to your financial advisor, talking to your CPA about gifting and being able to legally protect you and your family and their assets. I hope this helps. If you have any questions, let me know. Reach out below.